what we want to solve is to make sure that our advisors don't oversell.
There's still a bit of conflict of interest. But then what about ILP? Does it even fit into the picture? This is Eddie Cheong, the CEO of Heaven, which is a sister company to Provident. Heaven was created with an ambitious goal of redefining the insurance industry to provide a safe place for anyone who is looking to get insurance without being oversold or pressure sold, while minimizing potential conflict of interest. So what is Heaven and how is it different from other providers out there?
Okay, hey, first of all, Haven is an insurance advisory company. Okay, we don't deal with investments. But I think it's fair to say that everybody understands the importance of insurance, but they just don't like the buying process because of fear of being oversold, pressure, and missold. And these are actually a pain point of consumers. And this pain point is due to conflict of interest due to commissions, right? Because unless an advisor or agent sells something to you, they don't earn anything. So there is this incentives to want to sell this plan to you, okay, for the earning. All right. So at Haven, we want to be a safe place for people to seek insurance advice. In fact, Haven means a safe place. So when we set up Haven, we actually look into how we can mitigate this conflict of interest so that client's interest comes first when they seek advice. All right. So what we did is that we put in together 5 control measures to make sure that these conflict of interest are strongly mitigated. So all advisors or insurance specialists, they are salaried. But salaried doesn't mean that there is fear of conflict. Because if the variable is depending on how much commissions they bring in, how much annual premiums they bring in, then there's still an element of trying to upsell, right? So what we did is that beyond the fixed pay, we actually pay them based on number of lives. I mean, as long as if they are serving more clients, they should be remunerated more. Regardless of whether the client buy 1 plan or 5 plan, it's still the same. We recognize by number of lives. We don't advocate also the sales incentives because that may give the motivation for them to chase after sales. Thirdly, we are very transparent in how much commissions we earn from the sale of product. This is to prevent any unsuitable products sold to the customers in wanting to earn more. Fourthly, we are very clear in our philosophy. We publish our philosophies, how our views of insurance on our website. We even put together an ebook that you can download to read about it. And lastly, we have an institutionalized process, okay, whereby every client that comes to us will receive the same advice. But these are all internal, all right? Consumers doesn't see what is going on inside. To put our money where our mouth is, we actually offer this money back guarantee. This money back guarantee basically means that if ever our clients has been oversold through us, okay, we promise, we guarantee that we will return, we make right, and we will make right the policy and refund any excess plan to this client. Okay, and if let's say the policies that is being sold is not suitable, we even refund everything. By having these 5 control measures, we think that we have mitigated the conflict of interest as much as we can, so that a client's interest always comes first.
Like, are there any similar providers out there that is using this sort of like salary paid / fee-based approach?
From what I see, is none. We are probably the first one that does that. Okay, it took us a while to actually identify what are the models that is available out there, but the models that we see so far has issues, and therefore this is something that we have created for Haven. And secondly, the money back guarantee is the first of its kind in Singapore. You don't see anywhere offering you money back guarantee, but it's something that we think is very important that clients need to have the assurance when it comes to Haven.
This money back guarantee is on top of the 14 days free load period, right?
Yes, this 14 days free load is actually a standard feature for any product purchase in Singapore. All right. So what the 40 days free load basically means that if you decide to wake up one morning within 14 days, you decide that this plan is lousy, you want to terminate this plan, no question asked. Okay. So at Haven, this 14 days free look will still be available.
Alright.
But this is just 14 days, right? We want to make it, we want to stretch even further. to 365 days. But of course, these 365 days doesn't mean that you can wake up any time in this 1 year and then terminate a plan, because that's not what it's supposed to be.
Okay.
It's just to give assurance that if ever there's any overselling, okay, you can come to us and we will review. We have a process of review, and if it's found so, you return. We'll make right for you.
Okay.
Yeah. But I don't think it will ever happen. Oh, sorry. But I don't think that there will be cases like that. Yeah.
Okay. So just now you mentioned about paying them first a fixed salary,
Yes.
plus a commission whenever they serve someone. So it's paid based on life. So,
Yes, that's
but
right.
why not just remove the life part?
Uh-huh.
Because obviously there's still a bit of conflict of interest, and just pay a base salary to them.
Okay. I think firstly, we need to recognize that advisors, or we call them insurance specialists, when they are performing well, when they're serving a lot of clients, they need to be remunerated.
Okay.
So we need to find a way to remunerate. Okay. But most of the time, what people will use would be, the variable will depend on the commissions that they receive, right? But doing that, you will create that temptation to oversell. All right. By putting a fixed fee, meaning that regardless of what they're performing, you'll get a flat salary. We need to find a better way to compensate our advisors.
Okay.
And we find that counting on lives is the least conflicted way.
Okay. So then there comes the second conflict of interest. Because if they are just paid based on lives, and there's no incentive to like sell more in a way as compared to traditional FA lah, wouldn't they be more interested to just hit the body count and move on?
Okay, actually that's a very interesting observation, because that means firstly that the system is working. Because what we want to solve is to make sure that our advisors or insurance specialists don't oversell. Alright, so you bring out the other extreme whereby just closing one simple case and move on, and then be rewarded. Alright, this is unlikely to happen because firstly, we don't just use these control measures to solve the conflict interest part. We also very open in terms of sharing our philosophy. So, for example, if you come to a website, you can actually see how do we think about planning. We even have an ebook that actually written down how do we go about planning for a typical client. Okay. Right. So that part will prevent the insurance specialist from under recommending.
Okay.
All right. And secondly, also there is a institutionalized process whereby the supervisors will actually review the case and making sure that the recommendation is according to our framework.
Okay, just now you mentioned about Haven adopting this institutionalized approach, right?
Yes.
But what is exactly going on behind the scenes?
Okay, so the purpose of the institutionalized approach is that we want to make sure that every client that comes to Haven will receive the same advice. Because it will go through the same process, the philosophy, and being institutionalized also means that the odds behind supporting the insurance specialist, the claims process is team-based. Okay, so that's one thing. Second thing is that for Haven, we are very clear in terms of philosophy in the way we look at planning. For example, one of the philosophy for Haven is that the primary role of insurance is for protection, not for savings and investments. Okay, it is about paying as little as possible and getting as much coverage as possible.
Right.
All right. So these are one of the philosophies. And other parts is where how do we think about term plans, whole life plans, the role of ILP, whether it fits in. So all these are documented, and in fact we are very transparent to share this on our website, even in our articles and our videos that where we share how we do about these things. So firstly, our philosophies are made known. Secondly, internally, we also have a framework.
Okay.
When we think about protections, we have a framework of 5 core protection needs, whereby every client will go through these 5 core areas to assess whether they are adequately covered. So by going through a systematic process like this, we can ensure that every recommendations will be consistent.
The next thing is this thing called Insure Well Assessment. Can you talk more about that? What is it about?
Okay, Insure Well Assessment is basically an insurance review we offer to people who are interested to understand what policies they have bought in the past. Okay, and then they want to have an assessment of whether how it relates to their protection needs. Sometimes we have clients or we have people writing to us, they do not understand what they have. All right. Sometimes we do receive inquiries that they want to have a second opinion of what they have, or they do not know what they have, and they want to make sure that whether what they have fits into their protection needs. Okay, so the Insure Well assessment is basically a process whereby we help the consumers go through what they have, identify whether there is any potential areas of gaps through our in-house system of 5 core protection areas. If there are gaps, we also recommend solutions for them to consider using low-cost solutions.
Okay.
Yeah.
Is it free, or do I have to pay to do this assessment?
No, it's complimentary. Yes.
Complimentary. Okay. So if I go through this assessment, right, what happens if I'm sufficiently insured? Can I just walk away, or will everyone come after me and hey, here's a savings plan?
Yes, there's nothing holding you back.
Okay.
And really, for Haven, we want to be a safe place.
Okay.
So we won't pressure you to buy something that you actually do not need.
All right. That's good. Okay, then on the other hand, what if I'm not sufficiently insured? Then what will the process be like?
So as part of the review, we will compile the insurance plans that we have.
Okay.
All right, we put into a summary. So this summary can be given to the person who comes. Part of the work also, we will identify core gap areas. All right, if there's gap, we will give recommendations. The consumer can decide whether they want to proceed with us. Right? If they want to proceed with us, we will help them to prioritize their needs, their budget, what is more important to them at this moment, and we will help them implement the case for them.
So after going through this free Insure Well assessment, what's stopping me from taking this free advice and going elsewhere to do my stuff?
Actually, there's nothing stopping you, because at Haven we want to be that safe place. Okay, and if you were to pressure you to buy something, I think that's not consistent with what we want to do. But I think the questions consumer may have asked themselves is, what do they want to get out of Haven's analysis and work? Okay, because insurance is not just a transactional thing. It's not just about buying the plan through another person. Insurance actually is a lifelong relationship with the advisors. Whichever advisors you work with, it's a lifelong relationship because our life stages will change over time, and there's a need to review with the advisors. In the area of claims, you have to deal with the advisors for policy servicing and claims. So it's a long-term process. So my advice is that go with the advisors that you think that you will have a long-term relationship with the advisors. Yeah.
Okay. So just now you mentioned one thing about like this institutional approach thing, right? If I have engaged this advisor and this advisor, let's say he financially free and doesn't want to be working as an advisor already, so what will happen to me?
Okay, for Haven, we are institutionalized, meaning that when the advisors were to move on, new advisors will be dedicated to the client, to service. And because we are institutionalized in terms of how we think about planning, how we think about solutioning, all right? So, and even for our claims, for servicing, it is a team-based approach that's behind the insurance specialist. So there's no lapse in terms of the servicing that you can expect from the new advisors taking over, all right? So that's the assurance we want to give to our clients when it comes to Haven.
Okay. So how many insurance companies does Haven represent?
Okay, we currently represent about 7. We are also onboarding newer ones. Right. Okay. We have Income. HSBC Life. Sing Life. Tokyo Marine. FWD. Ethica. And Reference Health Insurance. Plus one more coming in.
So then the question would be like, if like for example, Great Eastern is not in there, would I miss out like the best insurance from Great Eastern in a way?
Actually, insurance has become very competitive. When you talk about term plans, when you talk about the hospital plans, the 7 insurers have actually very competitive solutions for our clients. So far we do not see any critical areas that can be fulfilled by these 7 insurance. In fact, some of these 7 insurance companies offers even more competitive rates and value compared to those that it's not in the panel.
So the common saying is buy term, invest the rest. So does whole life plan and ILP even have a place when it comes to like insuring people? So what are your thoughts starting with whole life plan?
So at Haven, there are 3 scenarios where we advocate whole life. Firstly, as a form of alternate medicine to complement your integrated shield plan. Because our integrated shield plan, though is very comprehensive, it doesn't cover everything. So there will be gaps in terms of coverage. For example, TCM or alternate medicine for supplements, even for cancer covers, there's a limit to how much you can cover right now. Okay, so the critical illness whole life can help to absorb some of these leakages from integration plan. Number 1. Number 2, for children. Okay, we also recognize that some parents, they want to have an early start insurance policy for the children. At Haven, we also use term to 99 as a form of whole life plan. Okay, this is useful because in the event of a claim, all right, sometimes the one of the parents, example, the mother, may want to stop work to take care of a kid. So this payout of this critical illness can actually provide a loss of income, okay, to supplement. Okay, and thirdly, is for legacy planning. Legacy planning is mainly for the affluent. Because for affluent, they have more than enough money for income replacement. Okay, they don't need to income replace because they have so much assets. They want to give a lump sum to a next generation. Okay, and one of the best way to do that is using whole life plans. So there are 3 scenarios.
But then what about ILP? Does it even fit into the picture?
At Haven, we do not advocate ILP. And the reason is this, is that if you unbundle the insurance protection and the investment element, okay, we find that consumers can get a better outcome because protection element can be covered using a term plan. Now this term can even cover 99. Alright, so it's very long. It's no longer 10, 20, 30 years. Okay, it can be very long. And for investments, when it comes to investments, there are a lot of investments options out there that are firstly low cost. There's wide range. There are index funds. There are globally diversified funds. That actually helps you to put together a better investment solutions that meets your needs. So by unbundling, actually there's a better outcome. So we don't recommend ILP. ILP also have a few risks that consumers should be aware of. All right. So this is especially the protection-based ILP. All right, the older form of ILPs. For this kind of ILPs, the insurance charges actually increases over time. So when a person is 55 and above, the cost of insurance is actually very high. Okay. Secondly, the investments element of ILP is not guaranteed. Unlike whole life plan, there's a guarantee, non-guarantee portion. Well, ILPs there's no guarantee. So what it means is that as a policyholders, you are taking the risk of the investment recommendations or insurance or the funds that you selected. If the funds is not doing well, and if the costs keep adding up at older ages, that you could run the risk of policy lapsation. Okay, so these are some things that consumers need to be aware of when they go into ILP.
What if someone who has an LP that come to Haven? Then you see, you use straight away cross it.
Yeah, okay. So though we don't recommend ILP, we recognize that it is still an instrument. Okay, it's still an insurance instrument. So when clients come to us for a review, all right, we will still recognize that as an insurance and see how it fits into their overall insurance needs. All right. So what it means is that we don't advocate them to terminate. Okay, we just help them recognize that if there's ILP, it may not be wise to keep it long term. Okay, because of the increase of what I mentioned, increasing charges. All right, and that's about it. It's up to the client's decision. But sometimes when clients come to us and then they have a need to review their policies, restructure policies because perhaps they have overpaid insurance. Okay. Or they have so much needs that they need to rationalize their insurance premiums to have all their bases met. And this is where we will look into what plans they have, including ILPs, and propose some options for them to consider.
Okay. Just now you mentioned about the old kind of ILP which focuses on protection. But what about the new kind of ILP, which I think is called 101 ILP? The good thing about that is that it encourages people to hold on to their investments which if I were to DIY, I might just sell off during a market crash. So the new kind of LP have a place to play.
Okay, the first issue is cost. The second issue of this one-on-one LP is the limitation in terms of the funds available. Okay, as I can understand, I can see most of the funds are active funds, are very higher cost. Okay, the second aspect of this one-on-one ILP is the number of funds that you can carry. Okay, for investment professionals, the wider the funds, the more diversified or even index funds, they are low cost. Okay, this could be actually good funds to have, but one-on-one may not have these funds. So there could be a lack of fund choices.
Okay,
and the last thing is the lock-in period.
Okay,
so you mentioned about the lock-in period actually help you stay invested.
Yeah.
All right. But there are times whereby we really need the money, right? There's emergency and we need to liquidate the money. Okay. So this lock-in period can actually work against you. So because of these three areas, we at Haven believes that it's better to actually go out and buy a pure investments.
But then what if I don't want to go out and buy my own investment? Will Haven provide that kind of service to invest for me in a way?
We can't because we are just focused on insurance plans. At Haven, we specialize on insurance.
Okay.
All right. So we don't go into the investment space.
Okay.
Right. But for clients who are looking for investment space, I think firstly you need to find someone that you can trust. All right. Find someone that is able to help you to manage your investments. All right. Because investment is such an important thing, you may want to also learn a bit about investment so you can ask the right question. You can know whether the advice is sound. All right. We cannot outsource these investment solutions to somebody to manage it for us. All right. So if you need help, you can actually watch your videos to learn more investments.
With all the SSB, SGS, bond, T-bills, fixed deposit, and all these kind of things, right? In what scenario does savings plan make sense? Like, let's say I want to save up for my kids' education 10 years later.
Okay.
What would Haven recommend?
All right. I think it really depends on you. I think at this current high interest rate environment, the T-bills, the SSBs is giving a return of more than 3%. Okay. So if you want to have a very safe instrument, I think these are some ways you can use first. All right, because it's guaranteed. All right, but if you are a risk taker, you may consider investment options to do that. Beyond this, T-bills and SSBs, there's also CPF. CPF is offering you 4 to 6%. So you can actually top up your CPF so that you can build up enough money for your CPF life. For people who wants to let's say plan for retirement. Okay. At Haven, we have a certain approach to this. Okay. Firstly, we encourage our clients to actually top up their CPF to at least to the FRS, full retirement scheme. At this moment is 205,800. Okay, for 55 years.
Yeah.
If you have this amount at 55 years, it will generate about $1,600 per month at 65. Okay. All right, and for life. Okay, so actually it's a very good income stream. But for people who want to actually have more, what can they do? Well, they can actually top up more into the CPF life to get a better retirement income.
Right.
But the CPF life has 3 limitations. So beyond FRS, some people may not want to commit too much because of these 3 limitations. Firstly, it's quite rigid in terms of the payout. The payout can only commence after 65. Okay, some people want to retire earlier. Okay. Number 2 is that some people may want to have more money earlier for a shorter period of time because that's where they are most healthy, they are most active. All right. For example, from 60 to 80 years old. All right. They are not so concerned about the tail end of their lives. Okay. That can be taken by their FRS. Right. So for these things, retirement income solutions or annuities actually can fit the bill very well. The third thing about CPF Life is that you couldn't terminate the plan once you're in it. All right. Why you need to terminate the plan? Because sometimes there may be a need to cash the money and enjoy because of shortened life expectancy.
Right.
But under CPF Life, you can't do that.
So basically, that's where the savings plan come in. It supplements the CPF life in a way. If I'm an office worker, is disability insurance necessary for me?
Okay. Yes, it is very important. Because Kelvin, what is the most important assets the person have? It's themselves. It's their ability to earn income, their skills, experience that they have accumulated all these years. All right. If they go and work, there is an income stream. Right? So that is the most important assets. Okay. What happens if, due to accident or illness, the person is not able to work? For example, mobility, speech, even cognitive. What will happen? The person cannot earn the income, right? Which type of insurance can the person rely on to replace the income? Your death cover cannot pay, your CI cannot pay, your TPD cannot pay, your medical plan cannot pay. There's only one plan that can pay in this scenario. That is a disability income plan.
Okay.
This is the most overlooked insurance plan I find in most Singaporeans here. Okay, and that could be because there are only 3 insurance companies that offers this plan. But for Haven, when clients come over to us for review, this is actually one of the 5 core areas that we will look into to help our clients making sure that their coverage is adequate.
Okay, yeah, because I don't have disability insurance. Okay, I think that's all for this interview. If you guys need an opinion on your insurance coverage, you can contact Eddie and his team using my link down below. Then on top of that, you will also get a small token of appreciation when you engage them. So that's all. Thank you. Bye.
Thank you. Bye.